Hey guys, welcome to IPTA-X Foundations, and today we're going to be going over the market maker models. So without further ado, let's get right to it. Alright, so just as a preface, the market is moving from stops to inefficiencies, and then this movement from stops to inefficiencies is what creates the phenomenon known as the market maker models. And there are two market maker models, the market maker buy model, or the mmxm, and the market maker sell model, also known as the mmxm. And the main aspects to the market maker model are the original consolidation, the smart money reversal, the redistribution levels, the reaccumulation levels, the low risk buys, and the low risk sells. And then the market maker model is a very high probable stage to take trades from if you understand what the draw on liquidity is. And the market maker model is nothing more than a more detailed way of understanding what you already see in price action. So if you guys don't understand any of this, don't worry, because right now what I'm doing is I'm just planting some seeds in your guys' minds. That way, once we come back from the chart examples, I'll go over this again, and then that way you guys will be able to kind of understand this in a better way. But for right now, just kind of take this at face value, and then you'll be able to understand a lot more once we actually look at the chart examples. All right, so the next one is going to be the market maker buy model. So this is what a market maker buy model will look like. And then the market maker buy model is when the algorithm will start the delivery from a consolidation or a short-term high, and will eventually drive into a key level or a PD array, and then it'll change its state of delivery at the smart money reversal. And then from this change in state of delivery, we will see a price run higher. So here we see that price is starting its delivery from this original consolidation, and then we see that price goes down, and then it forms this level of redistribution or this low risk sell. And then price comes down, and then price hits something here, and then price goes higher. And as you guys know from the last video, the only things in price that can change its state of delivery is a PD array. So when price is coming down like this, we know that the state of delivery is bearish, but price has hit something right here that's caused it to change its state of delivery and go higher. And that is a key level or a PD array. So that's why I say that the key levels or the PD arrays is where the smart money reversals happen. So we have that original consolidation, and then that redistribution level here, that smart money reversal, which happens at key levels, and then that low risk buy or that reaccumulation, and then we see a second low risk buy or second reaccumulation level here. And then once price clears that original consolidation, we are at terminus for the move, or that's when the market maker model ends. All right, so that's the market maker buy model. Now let's take a look at the market maker sell model. All right, so it's going to be the same thing, just flipped on its head. So the market maker sell model is when the algorithm will start the delivery from a consolidation or a short-term low, and will eventually drive into a key level or a PD array, and then it'll change its state of delivery at the smart money reversal. And then from this change in the state of delivery, we will see a price run lower. So right here, we see that original consolidation right here, and then we see that level of reaccumulation or that low risk buy, and then price goes up, it hits something to the left, and that's most likely a PD array or a key level, and then that causes price to change from buy side delivery to sell side delivery. And then from there we see this level of redistribution or this low risk sell, and then we see the second low risk sell or this redistribution level, and then we see that price reaches the terminus of the move once it clears out that original consolidation low. Now I know what you guys are probably thinking. Yeah, this is, it looks nice, but how do I actually apply this to the charts? Well, that's what I'm going to show you guys in just a little bit, but I just want to kind of lay the foundations for what to kind of expect when you see market maker models. So this is just kind of like me laying down what a market maker model is on paper, but we will take a look at what a market maker model will look like on the charts in just a little bit. But I just have to lay down a couple of key ideas before we actually do that. And I promise by the end of this, all of this will make sense. And, the market maker models won't be as ambiguous as they are to you guys right now. So let's just go over a few key ideas first, and then we'll take a look at the charts. All right, so another important factor in market maker models is order flow. And basically all order flow is a measure of whether we are bullish or bearish. And when we are bullish, we want to see bullish PD arrays and down close candles supporting price. And we also want to see bearish PD arrays and up close candles being negated. And when we're bearish, we want to see bearish PD arrays and up close candles supporting price. And we also want to see bullish PD arrays and down close candles being negated. All right, and then the final point here is that order flow is a means by which we can tell which side of the market maker model curve we are on. So I want you guys to know one thing. There's only ever going to be three types of price delivery: either bullish price delivery, bearish price delivery, or a consolidation. And when price is moving up, that means that order flow is bullish. And then when price is moving down, that means that price is on the sell side of the curve, or that we're bearish. And that's basically one way of looking at the market maker model is that there's only ever two sides of the curve. We're either on the buy side of the curve or we're on the sell side of the curve. And when we're on the buy side of the curve, we're seeking something, right? We're trying to reach up into a premium level when we're on the buy side of the curve. And then when we're on the sell side of the curve, we're seeking a discount level in price. Because as you guys should know by now, price is only ever moving from premium to discount, discount to premium, and so on and so forth. All right, so that is order flow. And now let's take a look at that last point before we actually go to the charts. Or one more thing, and then we'll take a look at the charts. But this is the characteristics of a smart money reversal. All right, so the smart money reversal must happen at a logical level, or a PD array. And just ask yourself, is this really a logical level for us to change our state of delivery? So if you see price come down and then go up a little bit, and then you go to your higher time frame, and then it doesn't really look like we're at any key level, then that move going up might just be inducement. So that's one way to kind of filter out whether we're actually changing our state of delivery, or if we're actually at a smart money reversal, is if we're at a key level. And key levels are where the most high probability smart money reversals actually take place. All right, and then one more thing is that a high probability smart money reversal will usually also have SMT. Now, I haven't really discussed what SMT is with you guys, but you guys can find plenty of YouTube videos on that, and I'll actually be creating a video on that myself in the future. But basically all that is just a signature in price that shows a divergence between two correlated or inversely correlated asset classes. And if that sounds confusing, don't worry, I'll create a future video on that. But just know that a high probability smart money reversal must happen at a logical level, or a PD array on the higher time frame, and it will usually also have smart SMT, or smart money technique, or smart money tool. All right, so let's take a look at one more thing. All right, so here's a few additional insights on the market maker model. Market maker models do not have to complete. So you don't have to see every market maker model take out the original consolidation. And then market maker buy models tend to complete in bullish markets, and market maker sell models tend to complete in bearish markets. Now, what do I mean by that? So this is a market maker sell model that has completed, and a market maker sell model that completes will take out that original consolidation right here. Now, Oftentimes, what you'll also see is that you'll see this original consolidation, you'll see this level of reaccumulation, the smart money reversal, and then price will, come down a little bit. And then from here, it'll usually just reverse sometimes. So that's because the market maker models don't have to complete. And same thing with the market maker buy model. We'll see that original consolidation, that smart money reversal, and then sometimes it'll just come up into a premium here, and then it'll start to sell off. But as I mentioned right here, in bullish conditions, the market maker buy models tend to complete, and in bearish conditions, market maker sell models tend to complete. And I'll tell you the reason for why that is in just a little bit. But let's take a look at these other two key points here as well. All right, so in bullish markets, retracements are the sell side of the curve, and expansions are the buy side of the curve. And then in bearish markets, retracements are just the buy side of the curve, and then expansions are the sell side of the curve. So I'm just going to let that cook a little bit while I grab my drawing tool, and I'll try to show you exactly what I mean by that. So let's imagine a bullish market like this, right? You can clearly see that, we're moving higher. And basically, what's happening is, as you guys should know, price is moving from stops to inefficiencies, right? So right here, we take stops, and then we come back in, and then we fill in the inefficiency. So when we're bullish, we're trying to take out the highs, right? So we're going from stops to inefficiencies, and in bullish markets, we're trying to take out the highs. So now let's put all those pieces together. So we have a high in a bullish market right here, and then we come down, and then we hit a inefficiency. So now this becomes the sell side of the curve, and then when we go higher, that becomes the buy side of the curve, right? This is the buy side of the curve, that's that sell side of the curve. And then since we're in a bullish market, we are going to tend to take out the highs. So that's what I mean when I say that in bullish market conditions, the market maker buy models tend to complete, is because you have your original consolidation. Let me see if I can make this a different color. All right, so you have your original consolidation. Okay, looks like that didn't work, but whatever. So you have your original consolidation here. We come back down into a PD array, typically an inefficiency. And then from there, we have that smart money reversal. And then we go over to the buy side of the curve. And then we complete that market maker buy model. All right, so let me just erase all of that. And then I'll show you guys what I mean for that flip side of the scenario on the market maker sell model. All right, so when we're bearish, the retracements are just the buy side of the curve, and then the expansions are the sell side of the curve. So when we're bearish, we tend to take out the lows, right? In bearish market conditions. All right, so here is that original consolidation or that short-term low, and then we're reaching into a inefficiency right here that's above price, and then we form our smart money reversal there, and then from there we'll expand lower, and then we'll take out that original consolidation. And then remember, think in terms of stops to inefficiencies. So we just took out stops. Now the next thing is for us to retrace, come back in for internal range liquidity and inefficiencies, right? And rebalance price. So let's say that we have an inefficiency here, and then we go up, right? So remember, in bearish markets, retracements are just the buy side of the curve, and expansions are the sell side of the curve. So here is that buy side of the curve. We hit that key level or that inefficiency right here, and then we come down, and then we take out that original consolidation. And remember, in bearish markets, the market maker sell models tend to complete. So now that we've gone over all the framework, I'm not gonna run you guys through a few of the trades that I took on NASDAQ and kind of what a market maker sell model or a market maker buy model will look like on live price action. All right, so we're here at the charts, and let me just use my replay function real quick, and then I'll show you guys what the market maker model will look like. in live price action. So let's go over to the daily time frame, and then let's take a look at what we can kind of see here. So as you guys know, price is going from stops to inefficiencies. And then right now we have the pretext of a bullish market. So those are two important things to keep in mind when looking at price. And then right now we see that we have just taken stops above that high, right? Because buy side liquidity rests above those highs. And then now, since we know that stops have been taken, the next stop is for price to rebalance the imbalances or the inefficiencies in price. So using that, let's go over to the 15-minute, and then now let's play out price action. And then that turquoise level right here, that blue shaded level right there, is going to be that daily inefficiency. So let's just play out price and then see what's happening. All right, so there's that huge volatility that comes in on Tuesday. And then we see price kind of trade away from that level. It's engineering some liquidity, goes up, comes back down, hits that key level one more time, hits it a third time, and then fails to go lower. And then we see price take off right there. All right, and then let me just stop it right there. All right, so look right here. This is a market maker buy model. Notice this is our original consolidation right here. This is your level of redistribution or your low risk sell. We'll just shade that in red. And then this is your smart money reversal at that key level right here. And then this is your level of reaccumulation right here. We'll just shade that in blue. And then here's your second level of reaccumulation right here. And then we see that we hit the terminus of the move right here. Once we clear out that high, we just barely poke through it. And that is the completion of the market maker buy model. All right, and then now let's take a look at one more example. Just give me 1 second. All right, so here we are. We see that we have just taken the highs right here. So we've just taken stops, and then the next order of business for price is to come and rebalance the old inefficiencies, which rest right here. And then you guys should know the drill by now. Let's go to the 15-minute time frame. Let me just get rid of this real quick. And then let's just play out price and then see what you guys notice. I'll just zoom out just a little bit. All right, so we've just hit that key level right there. And then there it is. All right, so here is that original consolidation. We see that price is accumulating orders, or sorry, is keeping price in that little range right there. So that is our original consolidation. And then here we see that level of redistribution right here. And then we see that smart money reversal happen right there at that key level. Right here, this is that smart money reversal. And then we don't really get a big level of reaccumulation, but we do have the small minor level right here. And then that's your low risk buy. And then we see that price trades aggressively higher, and then it clears out that market maker buy model. All right, so that's what a market maker model is on the charts. But before I end the video, let's go back to the presentation, and then let's put all the pieces back together. So remember when I said that I was just planting the seeds for what the market maker model is in your heads when I was going over the preface? Now let's go over it again. That way you guys can truly make sense of what I just showed you guys today. All right, so the market is moving from stops to inefficiencies. This movement from stops to inefficiencies is what creates the phenomenon known as the market maker models. There are two market maker models. the market maker buy model, and the market maker sell model. And then I'll go over to here. And then the market maker model is nothing more than a more detailed way of understanding for what you already see in price action. All right. And then right here, we see that order flow is just a measure of whether we're bullish or bearish. And then when we're bullish, we should see down close candles supporting price and bearish PD arrays getting violated. And then conversely, when we're bearish, we want to see bearish PD arrays and up close candles supporting price. And then we want to see the bullish PD arrays and down close candles being negated. All right. And then we'll go back to this additional insights page, which I think is the most important one. And basically, market maker models do not have to complete, and you don't have to see every market maker model take out the original consolidation. And then market maker buy models tend to complete in bullish markets, which I just showed you guys today on the chart on NASDAQ. And then market maker sell models tend to complete in bearish markets, using the same logic, just inverse of what we know for the bullish market. And then in bullish markets, retracements are just the sell side of the curve, and then the expansions are the buy side of the curve. And you guys saw exactly what I mean by that when we took a look at the chart example. And then the bearish markets, or in the bearish markets, the retracements are just the buy side of the curve, and the expansions are just the sell side of the curve. All right, so I hope that video was very insightful for you guys today. This is how I kind of frame market maker models in my head, and this is just the thinking that helped me understand them. So that's why I'm trying to share this with you guys, and hopefully you guys find some value from it. But I'll talk to you guys in the next video, and see you guys later.